Joining us is Synovus CEO Kevin Blair. Kevin, it's great to have you back on. Welcome.
Thanks, Sarah. Thanks for having me back on.
So how's it been going? Last time we talked to you, it was much closer to that March 9th failure of SVB when it was turmoil for regional banks. What's happened since?
Well, I think, as you said, we've seen prices improve this past week, and I think it's just taking some of the fears that have existed in the marketplace off the table. Liquidity's been strong, and I think regional banks have shown that despite some of the challenges that existed back in March, we've been able to not only keep our deposits, but actually grow in many situations. I think the second question that people had was what was the cost of the deposits going to do over time? And as we've gotten closer to the end of this cycle, I think we're starting to see some of the increases month on month of our deposit prices start to stabilize. And hopefully, as we get to the end of the cycle, you'll start to see the betas kind of hit their terminal levels and abate. And then the third question was around the regulatory environment, given what happened with these other institutions. How would that impact banks? And so, as we saw at the end of April with Vice Chairman Barr's report, it looks likely that the tailoring rules will be reversed and that banks over $100 billion will have to include things like AOCI back into their capital ratios, and they'll have to comply with things like LCR. And some of those rules, even though we're a $62 billion bank, I think will trickle down into our space. As it relates to stress testing and interest rate management and some of the liquidity environment testing that we'll have to do. But ultimately, as some of those fears abate, you can see that some of the investors think there's tremendous value based on where the regional banks were trading.
Absolutely. And a lot of those sort of existential fears have abated, Kevin, but there still is a lot of concern about earnings growth in this sector. And you see that by the fact that the stocks are still down 20, 30% year to date. How do you grow earnings in this kind of environment when there are so many headwinds?
Well, look, there is a lot of headwinds because we're still looking at what could be a recession, which, as you saw today with the jobless claims increase, that maybe some of the actions we're taking are starting to have an effect in the economy. And so we're next looking at credit costs to understand what those are going to do. As I've said in the past, I think Synovus is well situated in the Southeast where whatever recession we go through, we're going to be more insulated given the population growth and given the economic development that we continue to see in the Southeast. But where we're focused is with our core clients. How do you price loans? How do you generate fee income? How do you cross-sell into those relationships to ensure that you're maximizing your profitability? If the economy's not growing at 3 to 5%, then you've got to rely on those existing clients that you have. And how do you deepen your wallet share? And so I was just looking at some numbers we have on our Treasury side on a year-to-date basis. About 72% of our sales that we've had have been with existing clients. So when the things around you are not growing at a similar pace, you've got to really look at your existing relationships and use the value that we create to generate higher levels of productivity and profitability with those clients.